This is not financial nor professional advice. This video is for entertainment only. Hey everyone. There are many factors affecting the present stock market, but I think the big factor is Russia and whether Russia is going to invade the Ukraine. And I think that's going to determine to a large extent what happens. If Russia invades Ukraine, forget about what happens with these individual companies, because in many ways it won't matter for a while anyway. I think it'll go down 5% almost immediately, and I'll be jumping in my bear inverse funds at that point. And I might leave a small amount in a bear inverse fund like Sorty, SRTY. I might leave that in there over the weekends because I'm worried about a black swan event, which Russia invading Ukraine would be, which will immediately make my bear inverse fund go up 15% because it's triple leverage. If they go in, the market goes down 5%, my triple leverage inverse fund goes up 15%. So I think that's a reasonable thing to do. The funds that I lost money on Friday were SOX, SOXS, which is the triple leveraged semiconductor fund. I also was in SQQQ, which is the triple leverage shorting fund of the QQQs, which are the largest 100 companies on the Nasdaq. And also, I like Sorty. I think that's the one that's going to be my go-to. That seems like a sure thing. That's SRTY. It's a triple leveraged inverse fund on the Russell 2000. So I'm hoping the best turns out with Russia and that they don't invade. I think it's about a 60% chance that they will. So there's a significant chance that they won't, but the majority in my mind says that they probably will. So this will hopefully be a short-term event and won't shake the world too much. I just hope it doesn't go beyond Ukraine. NATO is reinforcing the borders and so forth so that it doesn't go beyond that. And the United States is sending military equipment. And I think we may send soldiers in non-combat roles, like we might use our military to help evacuate people from towns before the Russians get there. That sort of thing. But I think we want to be in a supportive role with equipment and doing non-combative sorts of, duties, I will call it, to help out in that way. But I don't think we want to be involved directly in combat. So it should be another rock and roll week. I'm trying to convince myself to leave the shorts on, but boy, is it hard when it goes down, because I think staying in bear inverse funds is more dangerous and more difficult. And this is why I don't recommend it to anyone that doesn't have experience with it, because you can get shaken out of these real fast. Because in my experience, a crash tends to happen usually faster than an uptrend. And that's why bull triple leverage funds are usually safer, because usually if you're in a bull market, it's more of a gradual increase. Yeah, you can have days that go up significantly, like 10%, but you can have bear market days that go down 20% or more when you're in a triple leverage bear fund. If Russia invades Ukraine, the United States has promised that it's going to put severe sanctions on Russia. And This usually affects the European countries quite a bit because they are so dependent on natural gas and energy from Russia. And they've done studies of what our sanctions in 2014 did to European countries, and it has a negative effect on most of them, but particularly Germany. And I think that's because Germany is highly reliant on natural gas and other energy from Russia. So this tends, it won't have a positive effect on the world economy, that's for sure. And the world's economy is already in such disarray. Now, in every crisis, there's an opportunity. The opportunity might be in energy, that oil and natural gas prices go up. It also might be that Germany gets more of its natural gas from the United States. So there's possible positive effects in the energy sector if you're invested in that. And there's ways you can invest in that. There's Gush, which is, I think it's a double leveraged energy fund. That's GUSH. You get $2 for every dollar oil goes up. This will go up $2. And then there's the general energy sector fund, which is XLE. And I sort of like the XLE better. To me, it looks like that has a smoother upward course, whereas Gush tends to be more volatile and not as steady of a cruise, if you will. So, but those would be my two if you're interested in doing something like that. And it's more of a longer term. I wouldn't be in it for too long. I would think it's like maybe a year or two sort of play, if that. Maybe less, but it would be a 6 month play for sure, maybe a year or two. You just have to see how world events unfold. But in every crisis, there's an opportunity, and if there is one, that would be one. I don't know how much it's going to disturb financial markets. These events always have more collateral effects than you realize. It could have the effect of making NATO stronger, which I don't think Russia is banking on. But if they get severe sanctions, plus making NATO stronger, they will have hurt Russia in many ways. So I see this as a big negative for Russia. I don't see why they have to do it. They get all the cooperation they want from Ukraine anyway. So it's totally unnecessary. Thanks for watching the video. Be sure to like and subscribe so that you receive future videos, and I will see you in the future. Thank you.